You family, today's class, um, today's class goes sweet because we are breaking down two powerful concepts wey dey make trading clearer. Okay, so it is supply demand zones and also fair value gaps. So if price dey confuse you, this one go open your eyes. I promise to keep it simple and relatable. So let's jump right to it, farms. So firstly, we need to know what is supply and demand. So as you can see here, I've already written it, right? I said, let's start with demand. I said that demand are areas where buyers previously stepped in with force, pushing price up. So demand is a buy zone, right? Sometimes it happens after a strong bullish move. Like you see a move like this now. Let me show you guys live chat example. Let me move this small to the side. You see this strong bullish move now that price broke this high right here. You are seeing it, right? This strong bullish move. The price broke this high. So this strong bullish move now, there's a demand at the bottom. This candle, this bearish candle before the bullish move is a demand. You are saying is this bearish candle, this ash before this blue is a demand. Let me change my color to ash. Right? It's a demand. So you are saying is so demand is the buy zone. So if price come back to this zone, we will be looking for a buy, right? Like you will be looking to go long, right? So demand is the buy zone. It happens what after a strong bullish move and last consolidation or drop before price short up. So if price consolidated, right, like move in this kind of scenario, let me show you guys. Then just went up, boom. You see, but this up that went like this, there will be a demand around this zone that made price to break structure around this zone right here. That made price to what break the structure to the upside, right? So this is an example of what a demand zone. So you can just think of demand like a cheap market. Like once price reaches that area again, buyers go rush am like say na promo. You understand, ba? E just be like this side now, e dey very cheap here. So once price just reach am, as they don see free things now, buyers go rush am. So you can just think of demand like that. So let's go to supply. Supply zone is a sell zone. So supply zone are areas, right, where sellers entered and dropped market fast. So supply zone it happens after a big bearish move. Let me see. Price went down with one kind of power. You see this one now, price went up in demand, right? It's a buy zone. While supply is a sell zone. Price can just maybe go down like this. Let me use the example. Like boom, like this. But for example, but if you're seeing something like this, that price went down in this kind of scenario now, right? There will be a supply zone around this side, right? Supply zone, I said what is a sell zone. There will be a supply zone around this side that made price to what fall with this kind of momentum heavily. So we will be looking to go short, right? We'll be looking what to go short. Set your stop loss below the previous high, then go short, right? So this is example of a supply, right? I said that supply is what areas where sellers enter the market and drop price fast. So it happens before a big bearish move, which I said, and last consolidation, right, or rally before the fall. So if you see price consolidated in this kind of scenario, family, una dey hear me clearly. This stuff will really help una, okay? If you see price consolidated like this, then fall, right? There is a high percentage that what led to this break of structure is a supply zone around here. Supply zone that led to this break of structure that made price to break structure. And there's a high probability that price will get back there, right? And continue dropping around this zone and continue dropping. right? So in this class, I will explain everything for you about supply, demand, and also fair value gap. So now like when make I say supply just be like when jollof rice for example now go for party, e nearly finish for party and people dey rush to go collect the last ones wey remain. So next time wey price go reach that spot, wahala fit happen again. Okay, next time wey price fit reach that spot wey be say um supply dey for there, e fit fall with power again. So na the scenario of supply and demand I just explain for you guys. So make we go live chat, make I show. I don dey show una example of demand, right? You see, demand is the last bearish move, right? Before a a um a displacement, a bullish displacement. Displacement just be like strong bullish move. Make I change my candle color for una. I know say this one go confuse una small, so I no wan confuse you guys based on say una na my guys, my family. Um, mhm. Green, green. I don't even nearly forget this symbol color sef because most of the times now this thing I dey use. So I don't say that this color now una go sabi. So you see this red candle now wey I mark for here, back for this side. Before all these bearish moves, this green, you see am ba? This red candle now na him be order block. Okay, I mean demand and order block is just the same thing, almost the same thing. There's no difference. But as I said that supply or demand just be like area, so na big place. So if you notice for this one now, my stop loss big. You see am ba? But order block now, you fit find am from 1 hour time frame lower. It go make your stop loss dey kind of small and it go give you better risk to reward ratio. Na same thing as supply and demand, but like e go give you better risk to reward ratio. So na im dem dey call order block. So as I don explain that one for una, make we move next. Make I show una examples of wetin we dey call demand. See supply now, for example now. If you notice, price did what? Made this big bearish move. See, price break this structure for here with power. Boom. And I say I'm back. Hope you guys are seeing clearly. You should be active. Sure, I'm screen recording the class, so after it I'll drop it for you guys after the class. So you are seeing now. You see this green candle. I tell you, see, for supply bar, the bullish candle before the bearish drop is your supply. That is green candle before price fall, na him be your supply. If na for sell, then for buy na red candle before price buy. So if you see over here, let me show you guys. Una dey see you. If una see over here now, you get one green candle wey dey for here. This upper one no dey valid. Why e no dey valid, I go tell una because we go still talk about FVG, that is fair value gap. I believe I don bin talk about am small for my previous class. So this candle right here now is the supply. You are seeing it. Let me mark the high and the low of the candle. If you notice, immediately price tap your supply zone. So welcome back, guys. So if you notice back, immediately price what? Tap your supply zone. Immediately price tap this supply zone. Now see as it take move with power. But una see as e move with power. So una need to understand this concept very well. So I dey here to guide una with the process. So make I just show una something. You see that set your stop loss what above the high or low. So this one now the high of this candle. If you notice, see where my demand end for here. This line. Let me use line to draw it for you guys. Nope, I do mistake. Let's take that again one more time. So you are seeing this white line go na that side the end, but I just draw and go up small in case of price don do in jedi. Una already know as price dey, make e no take me out quick. So if you notice now, if I say I wan enter this thing, target this low now as my take profit. Say I no wan get big IU and I no wan dey greedy. Na see as price just wipe am, boom, ba price break am only with wetin 3 candles. Leave 3 candles don hit my TP for here. So una see example of supply cool. Make we go up again, make I still show una another supply. This right here again na still supply. Make we zoom in go lower time frame. Here the candles there. So you see this green candle before this bearish move back, na still supply be this. But for me, I no dey use this kind of supply. Na better one I wan see. Something like this one wey go give me precise entry because this one too big. How I go come say I wan mark this candle reach the high? Like my stop loss go too big. I know the ones wey be say my stop loss dey pass 10 pips. Highest 10 pips. So let's go to another this thing. Let me show you example of a supply. Right? See right here again. This supply, but I'm not sure if price did mitigate it. Excuse me. Okay, right here now supply again. Price mitigate am sha. When I see am for here, if I show you. Make we zoom in go down. If I zoom in, this candle go start from one. I don't forget. To make this thing easy, let me just go to the 2 hours time frame. Because today's class we're just going to be fast about it because now 2 things we dey cover at once. So if una see clearly before price break here, una fit notice say price give space for here ba. Sometimes if price dey open on Monday, e dey jump. So this spacing for here na normal thing. Dis I wan try let una know now. Una see say price break this structure. You see this previous low, ba price break am. Maybe as e go weekend, Friday, Saturday, Sunday, ba Monday as e open, e fit give this space, ba because if you notice here na Friday waiting 8 o'clock. As if I know exactly because I know say mostly na weekend, Friday to Monday, price dey give this spacing like this. So if you understand charts, ba all these things no go hard you. Una dey see this space wey dey for here, wey this my arrow dey point like this, ba e happen on Friday. So maybe Monday now, when price continue, you see price break the low, price break wetin Friday low. So if before price break the low, e tap into one other block, that is supply. Una see the supply for here, price tap am, that is this bearish candle, right? We dey 2 hours time frame, una no forget. Price tap am for here. See price break structure ba BOS. Let me write it clearly for you guys. BOS. So if una notice for that side, wetin price do? Price break structure. Also for here, price did what? Break another structure, and price still create other block for here. This candle wey be like crucifix for here, make una fit think say na cross. This one na cross. Na still supply be this. Okay, na him be the better supply because na him make this break of structure for this downside. Na him cause am. If you zoom into lower time frame, you go see am clearly. Some of una fit use this big green candle for here, say na him be your supply. This one too big. As I say, me I no dey like use big candles for my supply. I dey make sure say I find clear and short something. Big candles for me, I no dey like big stop loss because risk to reward ratio matters to me very well. So if you notice, as price tap this supply again, let me write it. Supply, right? As price tap into this supply, wetin price do? I no dey like see supply outside, make put am inside. So wetin price do? Price fall. But at least if you no wan target high for this trade, you just target this low. you go surely hit TP because as I say earlier, no dey greedy. Say you put your stop loss above here, right? Then you enter at this zone and you target this low. 1:4. At least 1:4. Say na just this low you target. No I show una the low make I dey talk of. This low of this candle. I no even drag am reach there, make I drag am reach there. You see am? That is wetin 1:4.38. Right? So you dey risk 1 to get 4.38, you still dey profitable because risk to reward ratio matter. Right? So this one now na example of supply wey I dey tell una be this. Na example of supply. As I said, e happen before a big bearish move. If you see candle, this bearish move now wey you see price fall like this, hope una dey see am ba. Wey you see price fall like this bearish move now, the fall wey this thing fall na supply, na one supply make am fall heavily. So smart money now they go enter at this place. If you notice again, liquidity dey for this side. This one na tip I dey give una o. Always find liquidity near your POI. If you notice, liquidity dey for this side. That is why I post today for WhatsApp. I say wetin, let liquidity lead. Make I write am for una see. Let liquidity. Right? I don dey trade for years and I don understand things about liquidity. You always need liquidity as a trader. If you no see liquidity, no enter the trade. So this right here na liquidity. Liquidity, you fit write am in dollar. You see that? But then when price sweep am, e no go be dollar again. E go turn X. X means liquidity sweep. That means price don sweep am. Some traders, they no dey good with this term. So una, I no go just draw line for una. Everything make I dey draw, I go break am down step by step for una so that una go fit understand. So as price sweep am now, you see I write am as X, right? So price sweep our liquidity. That is, this kind na also inducement. Inducement na fake demand because some people go think say na for this side. I say wetin, inducement na fake demand. Na this side they go sell from. So all those retail traders wey no sabi trade now, they fit come put their stop loss for this side now, thinking that say na here price go sell from because of they see wetin, imbalance. See imbalance for this side. Imbalance, that is paper lookup, and we will still talk about that. Okay, so most of them fit come start sell from this side. And if you notice, wetin price do, price sweep them, go tap the main supply. See main supply for here, back come fall. So this is it about supply. Make sure say ba displacement. Una know wetin be displacement. Displacement na strong bullish or bearish move. If I wan spot supply or demand, go make I use for example supply. I go wait for price to first sweep liquidity, then fall with power, then create liquidity again before e go tap me in. Then I fit enter that trade. Okay, if I no see movement like this, forget, I no dey enter. Like just forget am. No matter how, I no go enter that trade. Wait, make I comot this thing, make I analyze this line, make I just draw for una. Firstly now, wetin I say if price sweep liquidity, I say na X bar, una go write X. That means X na price don sweep liquidity. Then wetin I talk, price need to change character or break structure. This one now make I draw na change of character now. So make I no wan write CH, that is change of character. E dey long, so I will just put only CH, that is change. But then wetin price do? Price creates liquidity at first for this side before sweeping am. So price still sweep am na same thing. We write X. Then wetin again? Supply dey for this side wey price come back come mitigate. So you see this supply now. Na see as price tap am go. And na see as price tap am. At this side now, if you see markets like this, e dey very strong. This one na for bearish scenario, maybe for sell, you wan sell. E dey very strong. Your take profit, you fit set am for maybe another demand. If you see demand or you see fair value gap, which I go say talk of, you fit set your take profit for there. Okay. Sometimes price no dey reach external liquidity and is this slow. Most times price no go reach am. Price fit just see one other block or something for here, then react to am, then just example react to am back, then just reverse. And you wey dey target here now, price go take you out because you wan dey greedy. So sometimes make sure say you dey good with your entry and exit. So make I remove this stuff for here, then make we continue. So now, how to identify valid ones, which I don tell una. Firstly, una go look for bearish movement, strong move away from that zone. Here I take talk like this, and I see the way price move strongly from here. See these red candles. If you see power with only this one candle drop, you see the power, you sef your mind go dey now. So firstly, but look for strong move. No be quick move wey you see price dey move like this right here. Make I show now. This right here. I zoom out small. I reduce this thing. You see this movement for here. For this side now, make I wan mark for now. If price move like this for me, but na rubbish. You understand? If you see price move like this, say you don come start dey say break of structure, this is that, for me na rubbish. Look for better movement wey price break that zone with power. No be all these small stuffs like this. Wey price break am with power, then you go see candles. Like if na for sell, you go see bearish candle, that is green candle. The way this green candle use dey for here. You see this green candle where I point go? The way e use dey for here. If na for sell, you go see green candle. If na for buy, you go see red candle. Then mark the base. That is, if na consolidation or small candle area, the way I use mark this candle now like this, and na him be the supply. You sef mark am. Then this one dey very importantly. Wait for price to return to your point of interest. That is your chance. No go say you wan enter price, price no wan tap you. Make I just go short. Price no wan reach where I set my point of interest. See, patience na virtue, and for this forex game, but the same way you dey wake up wan get money, another person dey wake up wan chop your money. Na who smart pass dey get the money. So you need to be patient. No rush anything. Calm down. Get your mindset check. If na hungry, you dey hungry, make sure say you find me chop before you enter that trade. No just enter am like that, because this game na game of probability. You need to smart. So as I talk, wait for price to reach your point of interest. If you notice, I wait patiently. If I go enter this trade, I go wait patiently. I fit just set limits for here for price to come back to my point of interest, then tap me in. Then I go target this low as my take profit. For me, my lowest risk to reward na 5. And if you notice, this one for here na 4.73. No, where I adjust now, so na 5. So I no go still take this trade except na that 5. So the cleaner and the fresher the zone dey, the stronger the reaction. If you notice, this side dey clean, this side dey neat, and you see the price break out with force back. Even though we go front again, look this side again, wetin sup? E still dey clean back, and e still dey fresh. And if una still notice, na still same thing happen for those of una wey get sense now. Make I analyze this thing for una, make una see. If una notice, wetin I talk, wait for price to sweep wetin liquidity. Maybe liquidity for here first of all. Maybe equal highs wey price sweep am for this upside. Make I show now. Wetin I dey talk of. Again, na still the same thing happen. So I go still break am down for una based on say wetin una do my mentees. So make I say I use this side as take profit. Now I say if price don sweep liquidity na X abi, then for this one now na continue na change of character, because price no break previous high. See high now, price no break am. And even price break this high, but I for say na break of structure. That means na continuous trend. That means price been dey uptrend, then it continue dey go uptrend. But this one na price change character. So as price no break that high now, wetin we go call am change of character. So CH OCH, I no write am full. So wetin I show now for here, area of supply. Let's make I go back to the chart. As una notice, wetin I show now, area of supply, right? See supply for here. Then wetin price do again? Price still create liquidity. Una see this line now, price create liquidity, then sweep am. Una see, ba? Una see clearly. Wetin price do for here? Price sweep another liquidity for here. Price always need liquidity, and the cleaner that zone dey, the better for you. If e dey rough, guy, e no valid. So if you notice, price first consolidate within your point of interest. If you see this thing for here now, na consolidation we dey call am, or accumulation, anyone you dey right. Price consolidate, e go reach point wey I go teach una about PO3. Make I write am. PO3. We dey call am wetin? Power of 3. Is power of 3. That is accumulation, manipulation, and how to like understand structure. Okay, structural bias. So when we continue wetin we been dey talk of. So as I talk, wetin price sweep liquidity again for there. And this is our point of interest. Listen, e tap am. So wetin you wan do ba? Firstly, you go go higher time frame, maybe 4 hours, 1 hour, for you to spot your supply or demand. Like me now, currently na 1 hour I dey now see am. Cool. As I spot am now for 1 hour time frame, I go wan see still change of character, like all my whole formation for 1 hour time frame. But if I wan start this analysis, see, I wan get am clear. For me, it depends o. If I wan get am clear, I fit start from weekly. This one now na daily I dey. I mean monthly. Make I say weekly, okay. Weekly does this more put daily. So and I see daily. Wetin dey happen for daily? Price dey bearish. Una dey see am ba? Una no worry for these things, make I just put for here. This one I just una sabi how e be already now, say na just teaching. I join this person, I no like am as e just dey like that. So una see say wetin price dey do for daily, price dey go up. Na like this I dey use analyze. You need higher time frame. Your buyers need to dey strong. So go higher time frame. No go start with 5 minutes say you wan analyze. See wetin price dey do for higher time frame. Una see am. So price never break this zone. Make I comot this line now. So if una see something like this, which I don already teach una about market structure for our first class, wetin I dey say price dey break structure to the upside. Cool. This is what we call break of structure. Wetin I do this mosquito looks nice. And if I on fan now, una no go dey hear me. That's how I just go fan. See break of structure ba? So this one now, price never break this structure. So make I comot this thing. So price never break this structure for here. So if una notice, price dey for wetin uptrend. Price clearly dey for uptrend. So I don't get the trend of the market, but firstly say we dey for uptrend for this trend. So now I will come zoom into 4 hours. Okay, zooming into 4 hours, I want to just see key levels where price don't be react from. So zooming into 4 hours, I will try spot something. If you just look around, okay, I don't see anything. For me, I will still go back down to 2 hours or 3 hours, but make I just zoom into 2 hours directly. Okay, I zoom into 2 hours and I dey trade with sessions. So for now, no be wetin we dey discuss on. So e go reach when I go teach una about session. So still for them 2 hours, I no spot any supply or demand clearly. Now I come 1 hour. Na since I dey jump from the time frame back, now I come wetin 1 hour. So 1 hour now, wetin I see for here? I see demand. Cool. I see demand for here. But as I see the demand for here, I mark am out. Another thing for here, for this one here again. And for 1 hour, this supply show. And I see this supply for here. Na for 1 hour e show. So wetin you go do now, as you don see am for 1 hour, mark out the levels, see liquidity sweep, change of character, your supply zone, then liquidity before price take am, put you inside the trade, then fall. Make I comot this accumulation box, make I drop for here. So una see as e just dey simple. Cool. So you need higher time frame for you to start the analysis, for you to understand am well. So now wey we say I don talk about this one, make we talk about fair value gap. So make I first define fair value gap for una. So what is fair value gap? What is fair value gap? Sorry, keyboard. What is fair value gap? Cool. Um so the simple definition of fair value gap is fair value gap. I just fair value gap is a gap between candles where price move too fast. Ewo, I don't too right go far. I suppose carry am come down for now. I dey come make I bring am down. Where price move facing too fast and didn't balance properly. So it shows still another way. It shows imbalance in the market. Price skipped because price skipped that place, skipped over it too quickly. So now the definition of fair value gap it is now. And I don't understand. Fair value gap is a gap between candles where price move too fast and things balance properly. So fair value gap now, if you notice now another criteria, right? Another criteria then is confluence where you fit use enter trade. You say if you see fair value gap for near your point of interest again, like you go be like, hey, yes, this supply na high probability own. So if you notice for here, after price sweep liquidity, change character, wetin you see for here, fair value gap. Fair value gap na three candle formation stuff. Okay, make I explain am for una. Make we say we get this candle go and another candle and another candle. Una see am back. Then I dey come make I just keep this thing spacing. Make we say we get three candles like this and all of them dey bearish. I just dey show una something new. You say na see me, I no even know wetin I dey do. Wait, let me increase this. Make I just put am 100. So now dey see this three candle formation make I draw back. Make we just imagine say na wetin I go do like this. E dey mind me. Make just imagine say na this three stuff make I draw am na candles abi, then wick come dey. And I know wetin be wick already now. Wick is something wey dey like rope for candle. So wick come dey for these candles. Make I say wick dey for here, wick dey for here, Now they see the week make I dey draw back. Una pay attention clearly. Week dey for here, then also week dey for here. That's the show now example. So you see this three candle formation now, ba? Fair value gap. If you want spot am now, make I tell you how to spot am. Look for three candles like this. Make I don draw for una, ba? I reduce this one. Look for three candles. First of all, the way I take draw these three candles for you, make una dey see, ba? Then big move candle. The gap between the first and the third candle, ba? Weeks no go fully overlap. If these weeks now cross instead, you see this gap now, you see this first candle, this one, ba? This one now be the first candle, then this one now be the third candle. Make I indicate that for the arrow. The first candle, ba? Then third candle. So now see this gap in between now, between the first we dey see for here, but the gap in between this first and this third candle now, this week, remember now here I mark. So you see this gap with the center now. Make I use something to cut this gap. You see this gap, reduce the transparency. Sorry, make I reduce transparency. Then I just leave and then put ash. So when I see this gap, make I draw like this number. This gap now him be your fair value gap. That is short form FVG. So now him be your fair value gap. Between your first and your third candle, within your point of interest na fair value gap at the corner. Wanna understand this thing clearly. Fair value gap na three candle formation. So the gap between first candle and last candle now the fair value gap. This one now for bearish move. Bullish move too now still the same thing. Make we say we get three candle formation still for bullish candle, right? Still three candle formation. Make I show now for bullish one and still same. No wasting of time. So you guys should just pay attention. So we go deep fast with the class. So you see this three candle formation now. Go for bullish move now. I'll make I raise this stuff up small. So if you see this three candle formation now, see week for here. But and also see week. I dey kind of draw this stuff more and just pay attention. When I no sleep, wake up if you want sleep. Don't forget the reason why you want learn forex. Because you go. See now this first candle now for bullish move now the down one be your first candle. Okay, so for bullish move, don't forget now the down one be your first candle. So this one is your first candle. First candle back. Then make I just copy them. Shift the arrow direction small. Then this one is your third candle. Third rating candle. So you see this gap now still between this first and this third. Now it still be your fair value gap. Now see this gap in between the first and the third candle. This gap for middle. The space seen will be between this first week and the third week. Cool. I reduce this stuff again. 20 no go bad. Then set them for ash. So you see this gap again between the first and your third candle. Na him dem dey call wetin? Fair fair value gap. Fair value gap. So you are saying it. So this is your fair value gap. If this week now, make I show una something. If for example now this week overlap, say these 2 weeks now cross theirself like this. Now they say amba, this one to come cross theirself. Then the fair value gap again because price balance this gap. If you see am like this, no gap in between am. Okay, no gap. So you no fit still draw something. No gap because price don balance am already. So now if you see say gap dey, make I say somehow like this, even though na like this e dey, you see this small gap wey dey from this first candle to this third candle, na him be your fair value gap. So fair value gap now dey important within your point of interest. Make we go back to the chart. Make I remove this stuff. Almost just leave am. Go back to the chart. So you see this first candle now. After I mark my point of interest, that is supply zone. This is my supply. I say wetin I dey like make e dey center. So supply zone. And I see the gap between the first and the third candle now. This my green candle low, and this other green candle. And I fit see am clear so. Make I zoom the chart. This green candle for here. Now, in between these three candles, now see this gap now from here to this my candle. Now him we dey call fair value gap. Cool. Now here I dey call wetin? Fair value gap, FVG. So this now for here, now our FVG. So now our FVG be this, okay? So if you notice that now, price come back, come balance this fair value gap, tap us inside, you see, then go in direction. So now fair value gap now na extra criteria, that is confluence wey you need. Firstly, you need wetin? Liquidity sweep, which I don tell una say price always need to sweep liquidity. Because if na for trend wey be say price change direction, like change of trend, for example, price dey go up now, sweep liquidity, change character, drop inducement, then tap in to your point of interest. If na something like this, go your fair value gap, make I say supply zone, right? Then now they say am clearly, then around this zone for here now, your imbalance go dey for here. That is fair value gap. Imbalance don master me, I no just know why. So I say same thing. You see fair value gap, then you see your supply. Cool. Then see where price sweep liquidity. Price change wetin? Character for here. That is our church. Make I dey write the thing. So una go fit dey see am. Small O, no forget. Church. Then price. This side na X. Because price sweep liquidity. Also here price wetin? Sweep another liquidity. So before this side na inducement. Inducement na IDM. You fit write IDM or you fit put X, anyone wey you want. So I just write IDM. IDM means inducement. Okay. Inducement. Inducement just be like fake demand to lure traders, to lure retail traders, into entering trade. So inducement now fake supply or demand. Sorry, fake supply. I just try to the demand. Make una no content say supply no follow. So fake supply or demand, right, to lure retail traders into entering trade. So this one now the fake demand. Price need to sweep up. Cool. Price need to collect liquidity. All those people will be say drop their money for here. Liquidity na money. So price need to collect liquidity before e go come go in main direction. That one something wey nearly bite me now. So price tap into the main supply, pull move aggressively downward. So this na him be mixture of the both of them. That is both fair value gap. What the fuck? Na shoot dey shoot for my area like this. So I don't even know if I want to talk again. Like I say I love them. So you're seeing it, right? This is this is it. This is it. So do you guys have any question that you want to ask? Let me go back to the class. Allowed to speak. So do you guys have any question that you want to ask my mentees, families? Do you have any question that you don't understand about this thing that I just said just now? Any question, you can just ask me. I'll break it down to you. Family, I'm waiting for you guys. If you have any question, you should ask. Okay, then I believe all of you must have understood what I just said, right? So mistakes you guys should avoid on this, which I said, is that don't trade weak zones. Okay, don't trade weak zones. Let me write this down also. Mistakes to avoid. Firstly, let me just write it. Mistakes to avoid. Then input another text. Then reduce the font size. Maybe 18. No go bad. So firstly, don't waiting. Don't trade weak zones. One are not the trade weak zones. There is no strong move away. If you see price no move strongly, no trader. Okay, you know the first trade. Remember, you be smart money trader. Smart money dey wait for money to complete am. We know the rush. So secondly, don't force entry. Don't force entry of price. That is, if price hasn't returned to your point of interest, returned to your POI. POI just means point of interest, guys. So make I go break am down for now. Then thirdly, don't use zones without confirmation. As I tell you, una always use zones with confirmation. Waiting, wey price sweep liquidity, change character, or if na break of structure, wey price break structure, drop let's say we are bullish now, right? Then price, you wan see price do something like this. Make I show you. The price break this thing and price wan come down. Right there, you wan see price either do something like this. Anyhow e do, but make you just see am do create liquidity. If e like, when na like this. If e no like, e no be like this. But wetin I go tell you be say, always wait for price to create liquidity within your point of interest before you enter. Like this now, wetin price do? Price creates liquidity clearly. Clear liquidity for here. So make we say see your point of interest here, and this one na same this thing trend. But see your trend line liquidity. I just draw this things once. So see your trend line liquidity. I'm coming. This one na for continuation market. If market still dey buy, for example. So this is your trend line liquidity, right? And maybe your fair value gap VD around this side. Don't forget your fair value gap VD waiting around here, close to your point of interest. Always with your fair value gap be very close to your point of interest, and make sure say na the down one you use. No go find fair value gap for middle of trade. If you notice me now, always the down one side demand. So fair value gap, right? Then your supply, I mean demand, because demand na for buy, which I talk am. Then supply na for sell. So now na buy with the buy. Then see where price broke structure. Price broke this structure. BOS, right? Then maybe you fit use this external high as your point, as your take profit, okay, as your TP. Or if there's any supply or something around this side, you fit use them to as your take profit. Make we say supply dey for here now. For example, I no go use that side as my take profit. I go use the supply. I say I buy. Go zoom out a little. Say supply dey. Now that supply I go use as my point of interest. This supply wey you see for here, I go use. I no go use the external high. This one na for continuous trend. Then if price wan change, where I use talk am. This one I don already show now. So if una see something like this, I believe most of una fit even understand am without me telling una. This one again, most of una understand am already. Make you see price. This one now, some people don't even already understand it. I don't draw for here. This one my explanation, but make I still go for moment. Let's say with this price sweep liquidity, for example, but that is X. Then this is your. This one is for what? A trend change or a market structure shift. If trend change direction, and it be for this one, then this right here is your supply. Supply, right? Then within around this side now, your imbalance go dey for here. IMB. Now the same bar. Then see where price. I mean IMB or fair value gap, anyone, okay, they are still the same. Fair value gap na gap, imbalance na still gap. All of them is just different terms. So smart money use FVG, while ICT use IMB, that is imbalance. Then this is where price collected liquidity, as inducement, IDM, which I don't already tell on the meaning of inducement. Then price tap entry. Then price creates another supply, for example now. Cool? Because as price don't change character again, still break structure now. If you notice price waiting here, firstly now our first change of character, which I tell Anna. So here now our waiting CH OCH, that is change of character. All of them are know it's in change of character. Here now price break structure BOS to the downside. So this break of structure now, the price don't break after tapping a point of interest. If you still open another position for this side again, then set your stop loss waiting. Now waiting they worry this thing now, okay? Okay. These people don't play with me now, sure. I set stop loss like that. My villagers will laugh at me. So I'm just kidding, guys. So in December, for example now, and you target this low, if you open two positions for this trade, maybe you don't be enter here before. As price don't move past your this thing. Okay. It's in this small, that is why price they don't like that. It is too small. See now this side be our main point of interest now. You can see that this side be our main point of interest. Make I longing this one too. So as price don't already move from here, this SL if you set and break even, Okay, so that even though price come back, if we take you out, then you will own another position. See your second position for it, and price start in, then price start move. Price they move, you go come on your Excel completely, right? Risk free, where you know say okay, once price hit your TP, don't hit that. So now example of change of trend be this, if price change trend. All these things make I dey draw, study am, make una dey study am. With time una go understand am. The same way wey I talk say when I start, right, all these things I no understand am. No be say I don go where I don reach, but the experience make I don get. I believe most traders, all these traders wey dey post profits never get am. But only be say I choose to appear real. If I wan show na only the wins, I go attract people wey be say want lies. But no, I wan show na as e be, the truth, like the real something for forex wey be say most professional traders no dey talk of. Na him be my goal for here. So try delete all these things. I believe una don understand the stuff make I explain for today's class. If you have any question, you can ask me now before I end the call. So do you guys have any question that you want to ask? If you have any question, you can just ask me, okay? Feel free, ask me. We did together for this thing. So since you don't have any question, let me just wrap up everything. You see, smart money but always wants good pricing. So when price leaves a zone, but when price leaves a zone fast or skips an area, maybe fair value gap, supply demand, it's often come back. So if you see the price skip this sign now, power, boom, leave this fair value gap for here, this one for here, but price most at times will come back, but not be always, like not be 100. Nothing the 100 for forex. If person tell you say he know why he enter this trade and he knows say he go must hit TP na lie, you dey analyze, no mean say ba you know if price will hit your take profit or not. Okay, it's your own that to just understand the market. That's one. So your job na to spot those zones and wait with sense. When I say with sense, with big sense, not be small sense, so big sense. So you go dey patient. You don't spot your zone, you don't analyze. Wait price tap your zone. Maybe price dey for middle like this now. Cool. When I start this thing, I do this mistake tire, and I know say most of una fit dey do this mistake. Price don start move, and maybe your friend don catch this trade from beginning, but you will be make I just join these guys so that me and him go like hit TP, make e no pass me. If you can enter, come go set your stop loss like this. Can't target something like this. Nonsense risk to reward ratio 1:1, or some people they trade 0.5. You risk 1 to get 0.5. Like how you go risk $1 to get $0.5? Don't be teaching me that. Me if I dey risk $1, the lowest make I wan get na 5. That's why I say 1:5 na I dey go for. So no dey enter trades anywhere. Okay, wait for price make e come wetin your zone, make e come back to your spot. Okay, that zone, and wait with sense. Na how you go grow edge be that. You dey hear people dey say edge. You need to have an edge in trading. Edge, maybe say you get big screen of laptop, so you sabi analyze. Na how your psychology dey, how patient you dey, how you take dey manage risks, all those things na him be your edge for trading. So if you learn something today, if you know say you understand something, send me 2K. Yo, I'm just kidding, guys. So you can just send your chat if you want me to check your favorite looker, supply on demand, or anything. Okay. So thank you, guys. Bye for now. Bye.